Let's get started.
Welcome to the Financial Purpose Podcast. All opinions expressed by me or guests of the podcast are solely our own opinions and do not reflect the opinion of Life Moves Wealth Management. This podcast is for informational purposes only and should not be relied upon for any investment decisions. Clients of Life Moves Wealth Management may maintain positions in the securities discussed in this podcast.
Hello, welcome to the Financial Purpose Podcast. This is episode 75. It's been about a hot minute since I've been in this chair. Last couple of weeks have been kind of crazy. We had the Business Transition Summit, and then I very promptly was ill for a number of days and not well. So anyway, back here, my voice might be a little bit crackly or sound kind of weird. I might take a drink of water here and there. We'll figure it out, but it's good to be back. Good to have you listening and watching today. One of the things that we were going to do as part of the Business Transition Summit was there was a breakout session that I moderated, and it was on financial planning, and specifically it was called Financial Planning, Why It Pays to Prepare Long Before the Exit. And we weren't able to capture that audio from the session. So I'm going to set up the questions that I asked in that panel, and then I'm going to provide an answer, because that's one of the things as a moderator that you don't get to do is you don't get to interject your answer to the question, because then, you know, the panelists don't get to answer the questions, which is what they are there for. You're there to ask the questions. So today I'm going to ask and answer the questions, and hopefully this is going to be helpful. So this is directed toward business owners, but the information applies to anybody, because when we talk about exit planning or retirement, we're talking kind of about the same things. In retirement, you're going to transition from working into a new reality, and as a business owner, you're going to transition from ownership into a new reality. The numbers look different, the process looks a little bit different, but the end result is the same. And quite honestly, the advice really is the same. It's just implementation gets a little different. So all of this will apply to anybody. Again, geared to business owners, but applicable if you're just thinking about retirements and you're not a business owner, or you are a business owner and all you've thought about is retirement. Maybe this is going to give you a little more food for thought. Okay, so the very first thing that I want to do is a little bit of definition. I had the panelists do this as well, and I had each of them take one of these terms. There's 3 or 4 terms that I'm going to talk about throughout this episode and throughout these questions. Those terms are financial planning, exit planning, tax planning, and estate planning. And we're going to define each of those. Because oftentimes it's easy to talk about all of those terms, and it's expected that you kind of know what those things mean, and maybe you don't, and that's not abnormal. A lot of people, even when you say things like retirement, it's really kind of unclear what that means, right? What is it? What is an exit? What does that really mean? And so I'm going to define those. So let me start with financial planning. Very first, financial planning for me is a process that we do ongoing, and it is designed to both protect and maximize your financial life in key areas, including your net worth, which is your assets and liabilities, how those are structured, what's going on there. We want to do good work to make sure that everything is owned the right way, that everything is owed correctly, that we have offsets for the balance sheet, meaning if you're paying debt, then that's increasing your net worth. If you're increasing debt, it's decreasing your net worth, and we want to be very strategic about those things. Although it's not always decreasing your net worth, because sometimes you're picking up an asset that's attached to debt. And so anyway, that's all a part of net worth planning. Then we're going to do cash flow planning, money in, money out. When does that happen? How does that happen? The next thing that we're going to cover is risk management, and that's every which way that you can be exposed really to any risk. And often we look at that in terms of the basic things like life and disability and liability, but we also extend that to other risks, which would include things like home and auto coverage and umbrella liability coverage and professional liability coverage and maybe long-term care and health insurance and all of those different ways that you're exposed to risk. Oftentimes because I mentioned the word insurance, oftentimes we're covering risks with insurance. Sometimes we're not. And so it's important that we have a good understanding of all of your risk exposure, how we mitigate that risk harming you financially. One of the other areas where we do risk management, but is a separate area, is investing. And so I talk a fair bit about investing on this podcast, and that's everything from what are we buying to what are we selling to what's the market doing to how does the economy impact the market. I mean, right now, the markets over the past 2 weeks have really been not good. There's a lot happening in the world. There's trade wars. In fact, today I sent out to clients and friends of Life Moves Wealth a 7-ish page report on Trade War 2.0. It's everything that you need to know. It gives you a little bit of history of the first run of trade wars under President Trump's first term, and then brings forward where we are today in the trade war, what's happening, what we need to look out for, what countries are involved, what are the risks exposed, where are some opportunities. It doesn't give any specific investment advice, but it does give some good education that's non-biased and not like crazy town, which is what you're going to get if you turn on the news. So if you want a copy of that report, send an email to info@lifemoveswealth.com and just put trade war report in the subject and I'll send that to you. Okay. Anyway, sorry, off topic, investing. Everything that's happening with your investments, your strategy, why do we own certain investments? What is it about those investments that gives us an investment thesis? How long are we going to hold these things? What are we expecting them to do in the portfolio? Not everything in your portfolio is going to go up and to the right to the same time or down and to the right at the same time, and that's on purpose. And so we want to make sure that we're being mindful, especially when the markets are going up. If there's something that's not going up as much as everything else, there's probably a good reason for that. And so we want to be very strategic with how we invest. The next thing that we're going to do then is tax planning, because I don't know how to do asset planning and cash flow planning and investment planning without looking at taxes, because that's also one of the areas where we need to do some risk management. So see how it's all connected. I often talk about financial planning like it's spaghetti. This is what I mean. Everything touches everything else. And so tax planning, we need to be very efficient with your taxes. That's everything from how you receive income to when you receive income to where the sources of income are located. How are those sources taxed? Is there a way to do that income receipt more efficiently through things like capital gains versus maybe long-term capital gains versus short-term capital gains, to maybe we're deferring gains on investments, to maybe we're putting money into retirement accounts, or we're doing things that are going to generate good deductions and tax credits. And so that's all a part of it. And we do that throughout the year. We don't wait until February, March, and April to do tax planning. We do that throughout the year because maybe we find out that we need to do things like maybe we need to send estimated payments so you're hitting your safe harbor number and not paying an under withholding penalty. Maybe we need to change your withholding strategy so that way you're withholding more or less depending on your tax results. And so we're going to do that planning throughout the year. And then we're going to do retirement planning. Retirement is always whatever that word means to you, but we need to look at an eventual exit strategy. If you're working, when are you going to be done? How much money do you need to have available in assets to make that decision wisely? And what's the next stage of your life? What is your purpose shifting toward? And we need to do that responsibly. And then finally, the last area that we're going to work on all the time is going to be estate planning. And that's very simply defined as everything that you're working so hard in your life to accumulate and to earn and to save. I want you to be the director of where that money and resource and assets and intangible items, where those things go. I want you to say where they go, not the state that you live in or the county court that you reside in. I want you to have that direction, and it needs to be written down and clear and reviewed regularly. And regularly is once a year I might look at things, but every 3 to 5 years, we're going to do just a cursory estate plan review to make sure that everything is still what you intended it to be. The names of the people in the document still reflect the names of the people who need to be in the document and vice versa. And then if something needs to change, we go get an attorney, we rewrite the document, we do an amendment or a codicil or something like that. So that's estate planning. So again, those key areas when we're talking about financial planning is going to be assets and liabilities, cash flow planning, risk management, investing, tax planning, retirement, and estate. And then when you're a business owner, we add in a whole nother, which is exit planning, which I'm actually going to define next. That was the next term, so I'll define it now. Exit planning, as I said, is pretty much understanding where you are in your business cycle and at what point does it make sense for you to have a transition. Now, exit does not mean selling. Exit can mean a bunch of different things. There's actually kind of like 10 common ways to exit your business. There's a blog post about this on lifemoveswealth.com. You can find it there. 10 ways, common ways to monetize your business is what that blog post is called. But that's part of the exit strategy. Where are you now? How many years do you want to continue to grow the business? How much do you want to grow the business? What's your annual run rate going to be? How are you running this business? Will you be able to accomplish that? How is your business structured from an entity standpoint? And how do you want to monetize it? Do you want to do an internal transfer to an employee or a family member or a key person? Or do you want to do an external transfer to a third party or to the private markets like private equity? Or do you want to have a public, an IPO? Do you want to go into the public markets? Do you want to just sell assets? Do you want to liquidate? There's like I said, 10 common ways to do it. So exit planning is where are you? Where are you going? How are we going to get you there? And then what's the strategy? And then we reverse engineer. Exit planning is very much like retirement planning. As I said earlier, it's kind of the same thing, just looks a little bit different because one involves a business and one involves a W-2 job or a consulting or some other form of 1099 subcontractor work. So exit planning is all of those things encompassed. It includes your personal financial planning. Those two things are symbiotic. They rely on each other. A business owner's personal life and financial life absolutely are tied together. And you've heard me say this before if you've listened to other episodes. There's no way to separate them. They're intrinsically linked. And so it's important that we get those two things right, that we get them merged, and that they operate in a financial plan cohesively. The next term that I'm going to define is tax planning. And I did a little bit of that already when I talked about it as one of the key areas of financial planning. And tax planning is very simply, how do we make sure that the financial activities that you're doing throughout the year generate a tax result that we can manage appropriately? Because I'm a fan of paying the correct amount of taxes. I'm not a fan of overpaying. And I'm not a fan of lending the government money interest-free throughout the year because they've demonstrated that they're incredibly inefficient with any money that we send them. So let's not continue to feed that animal. Let's keep more of that money in your pocket, but let's do taxes the right way. So let's make sure that we have, if you're selling an asset or buying an asset, that we have the tax picture controlled. If you're receiving income, if you are doing consulting work on the side, if you have a side business, in addition to your business, if you're buying another business, if you're going to exit your business, we want to have good tax strategy around those things before we make the moves, not after we make the moves. And that is tax planning. So we're going to know an outcome. We're going to have some good information before we make the decision. And then we're going to implement a strategy that's going to be tax efficient. And then the last term that I'm going to define as part of this is going to be estate planning. And again, I did this a little bit, but it's very much, you have stuff, you have house, you have bank accounts, you have investment accounts, you have a business, you have things in a safe, you have jewelry that's important to you, you have heirlooms that have been passed down, you have keepsakes, you have all sorts of things. It needs to be documented what happens to those things if something happens to you, and you need to be the one who decides that, not the county court, not the state court. not the Family Feud in front of Judge Judy or something like that. You need to be very clear about what you want to have happen, because it's kind to your family members for you to decide those things in advance. It saves them a lot of trouble. It saves them a lot of heartache. People show themselves in their true colors at weddings and funerals. That's an old adage, and they're 1,000% true. And so you want to make sure that you give your loved ones the least amount of mess to clean up as possible. And that's what estate planning does. As a financial planner, I do a lot of estate strategy. We bring in an attorney that we trust. The attorney helps us make sure that the wishes are expressed correctly in legal document form. And then, as I said, we regularly review those things to make sure that it's still accurate. Okay, so that gives us definition around those key terms. And so I'm going to move on to the first question that I had asked the panel. And the first question is, what's the biggest misconception business owners have about financial and exit planning? How does it hold them back from starting the process sooner? So what's a misconception? Why do business owners wait? Basically is what we're asking. I would say the biggest misconception that business owners have is that you have to wait until you have money to get financial advice. Now, I'll say that's a misconception because it's actually, that statement is true. At a lot of financial firms, you get no attention until you have money to manage. And by money to manage, I mean 500,000. A lot of times it's $1 million. Sometimes it's as high as 5 million or more. If you don't have that money walking in the door that you're going to promise to turn over to the financial advisor, you're not going to get their attention. And so a lot of business owners know that because that's how the industry has conditioned people to think. And so, and they're conditioned to think that way because that's how the industry behaves, unfortunately. And so the misconception is that you have to have a lot of money that an advisor can manage before you get help. And the reason why people, I think, delay getting started, or why they don't start planning sooner, is because they probably don't think they need to. It's probably very common to think about selling or transitioning a business kind of like selling a house. When you're ready to sell the house, you just call a realtor, you put it on the market, and they start doing their thing to get people in to take a look at it. And I think a lot of business owners think that transitioning a business works the same way, but you can sell your house in 60 days or less. You cannot appropriately sell a business in 60 days or less. In fact, it probably takes somewhere around a year, maybe a year and a half, to appropriately sell a business, just because of the due diligence timeframes, the back and forth negotiation, the amount of time that it takes you to clean up certain things, ad backs and financials, and the CPAs and attorneys and other advisors that have to be involved in the valuation time frame, right? There's a lot that goes into selling a business or transitioning a business that a lot of people don't think about. And so you can't just put it on the market. It doesn't work that way. The other reason why I think business owners delay is because often business owners don't like to be told what to do. They don't like to do what they don't think they should do. And they often don't like to pay people to tell them what to do that they don't want to do, myself included sometimes. So that's why I think business owners delay. And that's why what I think is the misconception there. It doesn't take as much time as you think, and I don't need very much time to get ready because I'll know when I'm ready, and when I'm ready, we can do it. And I would say that's not true. As a side question, does the financial planning and exit planning process change based on the type of business and the size of the business? And the answer is yes. And that's because the process remains the same and the steps remain the same, but how those are implemented, and sometimes even in what order, does depend on the size of the business, does depend on how much money is going to be involved. And it kind of depends on maybe the type of business. Certain industries may take longer. Certain industries may need certain approvals from other governing bodies that need to be included in that time frame. And so, yeah, it's going to be very personal to the business and to the business owner as far as how those steps get played out. Okay, next question. Why is it critical for business owners to view financial and exit planning as an ongoing process rather than a one-time event? I like this question a lot. Financial planning, as I said, I went through, is all of those things that we included, but it is not a one-time report that you pay for. So you can write a financial plan, and as soon as I hit print and hand it to you, it's no good. It's already expired. It's already outdated. Why? Because money has already moved in your bank account. Something's moved in the stock market, so your asset values are going to be different. You've left my office and you've gone and purchased something, or you've received income from something. And so that report, as a one-time thing, is completely useless. Now, the act of planning, which may include other reports that I know are useless as soon as I hit print or as soon as I email them to you, but we're actively planning and we provide those snapshots in time, those progress reports, because it's important to mark the milestones along our journey. But you have to continue to plan the journey because things happen, right? If you're driving from Phoenix, Arizona to Los Angeles, California, you should be able to just get on the 10 and head west and you'll get there. But there may be a detour. There may be a weather event that means that you need to not travel during a certain period of time. There are high winds through a lot of that area that can topple a tractor trailer or can kick up a dust storm that you don't want to drive through. Or it could be monsoon season, or there could be an accident that closes the road, or they could be working on the road that condenses it down to a one-lane highway, and so you want to get around it. If you're not actively running your GPS, you're just going to get stuck and you're not going to know those things, and maybe your outcomes aren't going to be as good. You might eventually get to Los Angeles, California, but you might have to stop more often for gas or to charge the car if you're in an EV or whatever. Or you may run out of food or whatever it is. You'll still get there, but your outcomes are not going to be as optimal. Financial planning helps you get to where you're trying to go with the most optimal outcomes because we're constantly, like a GPS, checking what's going on, scanning the horizon, looking for opportunities, managing risks, and moving forward. So it's an ongoing process. It's never a one-time event. And in fact, I tell new clients coming in that if I do my job correctly and you do your job correctly as a client, we will never be finished with your financial planning efforts. It'll never be done. Never completed is maybe the better word than done. Never completed. And in fact, your financial planning factors then step to your children. If something happens to you, it now gets forwarded to your family because there's financial implications of things that we put together that now they have to deal with, distribute, manage, take on ownership of, that kind of thing. So it's never finished. It's it's a work that's never finished, I think is what I mean to say there. Next question. How does early planning impact the financial health of a business, both in terms of current operations and current valuation? This is also a fantastic question because it's very easy as a business owner to just do what you do. And maybe once a quarter or once a month or once a year for some people, look at your P&L and go, oh, okay, yeah, what's my net? Oh, okay, shoot, I'm going to have to pay taxes. Like, that's the process. How much did I earn? Or, what revenue came in? Oh, we spent a lot of money. Geez, maybe I need to go quickly spend more so I can drive my net revenue down because I don't want to pay taxes on it. And so for some people, that's how they evaluate the financial health of the business. A lot of business owners judge the financial health of the business based on how much money's in the bank account. And both of those things are where you miss a ton of opportunity. And frankly, if you're the latter business owner where you're just looking at how much money's in the bank account, there's a very good chance that you're going to run your business dry because you can't manage your financial health through the bank balance. It doesn't work. It's not an accurate thing. You can't plan how much revenue to bring in and how much money to push out and how much inventory to buy and whether or not you can give your people their well-deserved raises and bonuses and things like that. You can't make good, sound, accurate, manageable decisions based on the bank balance. You just can't. So as a business owner, you need to be planning, and you need to be planning early, because however you intend to transition your business, we need to start today. Even if that day that you're going to transition is 2 years away or 20 years away, we need to start planning for that day now, because there's going to be a lot of factors that are going to change. It's just like financial planning. We don't wait until you're ready to retire to start financial planning and investment planning and tax planning and all the things. We do it long in advance, so that by the time you get there, you're where you want to be or better. And it's the same thing with your business. So if you're thinking about how you're going to transition your business, how you're going to grow your business, because those two things are linked, you need to start planning now. And so you need to start thinking about your operational efficiency, your documentation, your legal formation, your contracts, your advertising strategy, your marketing implementation, how you approach clients, how you price your product and services. You need to look at all of those things and plan for those things, because little tiny tweaks across those things lead to different outcomes at the end of the year. And you don't want to wait until December to start figuring out where your business is. You want to start in January. Take that back. You want to start the prior October, so that you start implementing on January 1 or January 2nd for most people. And then you're driving toward where you actually want to be in December. So you know along the way if you're on track or not, and what you need to change or implement or adjust or tweak or whatever to get to where you're trying to go. So that's why you want to be planning early and often, because the more often you're planning and the better you're planning, it's going to drive your valuation higher over time. And a higher valuation gives you many more options for how you transition that business on your terms. Next question. What risks do business owners face when they delay exit planning, especially when the reason they feel they're ready, or the reason why they delay exit planning is because they feel like they're not ready to sell and they won't be ready for some time? So I just talked about this. It doesn't matter, as I said, if you're ready to transition now or forever away or never, right? That can be the thing for some people, is I'm never going to sell my business or transition it, or let my employees buy it or give it to the kids or to the charity or whatever. I'm never going to do it. Never going to get out of the business. I'm going to tell you, your business is going to transition one way or another. And you're either going to be in control of how that plays out, or you are not. And a lot of times when you're not, it's because some sort of life event forces your hand. And usually that's going to be, one of the big D's, which are things like death, disability, divorce, delinquencies, lack of what do we call it? Lack of liquidity, or you'll run out of money. Those are all the things that are going to force your hand, and you're going to have to make decisions you don't want to make in ways that you don't want to make them. So that's why you want to start planning. And the risk that you face if you wait, because you think you're not ready, the risk is that something's going to be out of your control sooner rather than later, and you're not going to know what to do. You're not going to have a game plan in place. You're going to lose a key employee. Somebody's going to sue you. You're going to be forced to close a plant or operation or a location. Or the flip side, you're going to grow too fast. You're going to be forced to open another location. You're going to be forced to bring on a new product. You're going to be forced to expand the warehouse, and you're not going to have a plan in place for how to do that. All of those things are included in exit planning because they're driving the strategy toward the end result. So the risk is very much that you're going to expose yourself to something that you're not prepared for, and it's going to harm your business. Even the good things can be detrimental to your business, because if you grow too fast, you don't have the operational procedures in place, you'll decline faster, right? The elevator always goes up, right? And the roller coaster goes down, and they move that fast. The elevator moves up slower, roller coaster goes down fast. And the same is true in the stock market, by the way, which is why you need to have a a investment plan in place for when things happen that are out of your control. You know what to execute next. You know what to do next because you already have the plan. So the risk is if you wait, you're going to have something happen. You're not going to be ready for it. It's going to harm your business. If it harms your business, it's going to harm your valuation. If it harms your valuation, it's going to be very difficult for you to have better options later down the road. Okay, next question. How is today's economic climate impacting the urgency for business owners to begin planning both financially and for their exit? So the speed of business is very fast. As of right now, it's moving really fast because we have trade wars and tariffs and a very, very high consumeristic economy. It's a very high service economy. People want things now. They want things fast. They want to work from home. They want to dictate their hours. They want to determine how they're going to interact with clients. People want text but not email. They want email but not text. They want a phone call but not email. They want email but not a phone call, right? So just our communication preferences are changing. Our interfaces, the technology, AI-driven solutions, everything's moving so fast. And so all of that impacts the economy. And a lot of businesses right now are having to make very quick adjustments to their business projections, not only for this year or this quarter, but they're having to think about how they're going to be impacted 3 and 5 years out because of a very simple thing like a 25% tariff on goods coming across the border. If that's impacting your business, you now have to decide how much can we absorb as the business versus how much can and has to be passed on to the consumer. How much can the consumer bear when we're already in a situation where they're paying higher cost across the board for almost everything else in their life? At what point do we reach saturation and they're going to stop buying our products, or they're going to buy less of our products when the price goes higher? And what is that going to do not only to our business, but how is that going to drive the larger activity in the economy? And so, again, people can kind of see that happening and get in a wait and see mode. And the problem with wait and see is you're letting things happen to you before you're deciding what to do about it. And that's why planning, again, not to beat a dead horse, but that is why, or a dying horse. I don't know if it's dead yet. I'm going to continue to beat it. It's probably dying, not dead yet, but here we are. Setting the planning in place is going to tell you what to do next. It's kind of like having bylaws or an operating agreement for your business. It doesn't tell you what to do in your business. It tells you how you're running your business, right? You hear the difference? It doesn't tell you what to do. It tells you how you're running it. And so that's what the plan does. How are you running your operations, your business, your financials, your personal financials? How much income? Is there a point when you need to take less income because the business needs more funding, right? All of that's part of the plan. That's all plan A, plan B, plan C. It's all wrapped up together. It's part of the strategy. You know what to do next because you already have that written down. So the climate, I think, is putting some urgency around that because there are people who are looking at this and saying, I don't want to put up with this stuff anymore. I'm going to sell. I'm going to get out. I'm going to retire. I'm going to be done. And a lot of that's very economically driven. And we certainly had that through COVID over the past 5 years. It forced a lot of people to make fundamentally different decisions than they were planning on making during that time. So I think there's a lot of urgency right now for business owners to start thinking about what the future looks like. And again, the risk of waiting is that you're opening yourself up to things that you're not ready for. Next question. Why is it important for business owners to align their personal financial goals with their business exit strategy? I love this question. It feeds right into my specialty. And very simply, there is absolutely no way, if you are a business owner and I'm your financial advisor, there is no way for me to appropriately do anything in your personal life without including your business activities. So if I'm going to give you advice in your personal finances, that advice has to align with what's happening in the business. Because if it doesn't, it's not going to work on the personal side. And then the whole strategy that we're trying to set up falls apart because a key element's missing because it doesn't work for the business. So good example. If I tell you that one of the things that we need to do to put your asset plan, your investment plan, your tax plan, your retirement plan, your estate plan, right? If we're doing something like simple as, hey, this year, let's take cash flow, let's max fund your company sponsored retirement plan because you have so much of your net worth that's wrapped up in the value of the business. We need to start diversifying where your assets and wealth are located. So let's start with a qualified plan because it's going to put money away for you. It's going to generate an investment strategy. It's going to give you a tax deduction on the business side. Or I might say, hey, one of the things that we might want to consider, since you have this, and this, and this, and this, and this other thing going on, is maybe let's look at a piece of real estate to further diversify where your wealth is being built and how your assets are represented. So if you're at 70-80% of your total net worth is wrapped up in the business, let's shift some of that over here. All of that sounds fantastic, but if you don't have the cash flow in the business, you're not going to have the cash flow personally, and then none of those things are going to work. And so I need to understand how you're running your business so that I can properly advise you both in the business and in the personal side. They're spaghetti. They go together. There's no way to separate them. So any personal goal needs to have the business in mind, because for most business owners, that business value is your retirement plan. You don't have a massive 401k that you've been contributing to for 20 or 30 years. Your 401k is that business that you've been reinvesting into and dumping all the cash flow into and keeping the money in and sacrificing some of your personal things some years and taking money out of the business in other years to kind of pay yourself back, or to take that, vacation that you've been waiting for, or to buy the thing that you've wanted to buy. That business is your piggy bank, if you will, or your 401k or your retirement plan. So we need to know what that retirement plan is going to be worth, and that it is going to be worth something, and that we can actually plan around it. So those two things, as I said earlier in the podcast, your business life, your personal life, the financials, they're intrinsically linked. They have to be linked. It's foolish to try to separate them. It is absolutely foolish to tell a financial advisor that they can't have any insight into your business, that they can't see your P&L, that they can't see your balance sheet, that they can't see your tax return. It's foolish. The only reason that a financial advisor needs to see those things is so we can properly advise you on what to do next to make the outcomes better. So the more we know about all of it, the better your outcomes are going to be, the better advisors we can be to you. We become fully indispensable. And quite frankly, with the amount of effort that we save you, the amount of money that we save you, the amount of money that we can make for you, or that our advice will make for you once you implement it, it makes our fees completely irrelevant, quite honestly. And so we need to be able to be the most helpful to you, so that way we're not helpful, right? See what I'm saying? So it's important to, because those things are so closely linked. Like I said, they're tied together. It's spaghetti. It touches everything, touches everything, everything touches everything. And same for me personally. What happens that life moves wealth from the business side directly impacts my personal financial life, and vice versa. So I need to be doing those two things together, because if I have something heavy happening on the personal side, it's going to weigh on life moves wealth if I need more cash flow for my personal things, and vice versa. So they're linked. They have to be done together. They should never be done separately. If you're working with a financial advisor and they've never asked you about your business, they've never seen your P&L, they've never talked to you about your operation strategy, they've never asked you about your clients and how you're charging them and all these things. If you've never had a conversation about business with your financial advisor, fire your financial advisor, because they're not doing their job. And probably because they're not incentivized to do that work, because their pay structure only pays them to collect assets and sell bullshit insurance products and things like that. So if that's you and that's your advisor, please send an email to info@lifemoveswealth.com and ask for a second opinion. Let me take a look at where you are personally and in the business. I'm going to give you some insights on both of those things. We're going to talk about where you stand financially in both of those areas, and you're going to have a far better advisory experience. So again, if your advisor's never asked you about your business, they're not advising you, fire them. Please come to lifemoveswealth.com. Let me do the good work for you. Okay, that's the shameless plug. All right, next and final question. For those who feel overwhelmed, and this is a great way to end this podcast episode, if you feel overwhelmed listening to this or thinking about the planning process or thinking about having to open the the vest, if you will, and share everything, if that sounds overwhelming and painful, what advice could I give you to help you make that first and critical first step, which is picking up the phone, sending the email, sending a text, whatever it is, however you're getting in touch with me. The advice I'm going to give you is just do it. Just take the initiative and reach out. My job is to make it as painless as possible. It is going to be painful because there's all these documents and you have to share your story and some of your history, and I might poke you in some areas where I think you need to be poked. I might prod you in areas where maybe I feel like you're not giving me all the information. And I'm gonna completely applaud you in areas where you're kicking ass, because business owners sometimes don't get enough of that. We don't get enough pats on the back. We're not often told that we're doing a great job. Sometimes we're told that we're shit by our employees, right? Because we're not giving them what they want. We're not giving them their raise, or we're not giving them enough, or whatever. Sometimes the hardest and loneliest road is the road of a business owner. And so you need an advocate. You need somebody who can look at everything. Now, I'm going to stay in my lane. I've talked a lot about knowing operational procedure. I'm not going to fix your operations. I'm not going to file your tax return. I'm going to give you some strategy in those areas, and then we're going to go pull in a professional who does that job every day and helps people do those things better every day. And you're going to hire them too, because they are going to improve your business. And when you improve your business, you're going to improve your financial outcomes. And when you improve your financial outcomes, we're going to have a lot to celebrate one day, and it's going to be fantastic. So take the first step, reach out. Don't be overwhelmed. I know it's natural to be overwhelmed. It's a lot. There's a lot going on. Just start. Just send the email, info@lifemoveswealth.com. Call the number. Go to the website, lifemoveswealth.com. Click the calendar button. Whatever you want to do, however you want to approach it, just do it and start today. If it's not right for us to continue to work together, if there's not a fit, I'm going to be the first one to tell you that, because it doesn't make sense for me to ask you to pay me for something that I know isn't going to work for you. It's malpractice. It's unethical. I'm not going to do it. But if it is a good fit, I'm going to tell you what it is. I'm going to price it appropriately, which may or may not be less than somebody else or more than somebody else. I don't know. Frankly, I don't care what somebody else charges, because I can tell you with 100% certainty that they are not going to give you the experience that we're going to give you at Life Moves Wealth. So we're going to price it. We're going to talk about it. We're going to tell you everything that's included, and we're going to get to work, and we're going to always be updating things and always be checking in and always be making decisions and always be executing and implementing and executing and implementing and executing and implementing. And it's going to lead to better results for you. So I hope that this episode has been helpful. I hope those questions and answers gave you some insight into the process. Sometimes the hardest thing to do is describe what it is that I actually do. And I actually spent some time this weekend tweaking some of that on the Life Moves Wealth website to try to better describe exactly what it is that you get when you work with me. I recently had a prospective client, and they were, I felt a little confused about what it is that they're actually going to get for the amount of money that they would pay in an advisory fee. And so I had to work through that, and I had to really think through it, because sometimes I don't know everything that's going to be included until we're in the middle of something and I spot something, right? But I still have to define a scope of work. It's kind of like remodeling your house. I know we're going to do this, and we're going to take out this wall, and we're going to put this thing over here and move that there and change this outlet and put the carpet down or put the tile down, and then we're going to do the backsplash and whatever. But when I open something up, I may discover that the scope of work has to change, because maybe there's not an appropriate stud there for us to be able to anchor something to the wall, or maybe the subflooring is rotted, or the roof is rotted, or whatever, right? All these things happen. It's not all that different when you take your car in for service. They may start pulling apart the engine and notice something else over here that needs to be addressed. And so it's the same thing. We have a general scope of work. Here's the work that we do. Here's everything that's included. But that scope of work may change, and it may or may not reflect a price change. Most often than not, I just change the scope of work, and I don't really mess around with moving the price very much, because I never want people to feel like it's a gotcha moment, and no advisor should. And so if you go to lifemoveswealth.com, right on the homepage, it's going to be very clear what we do. Follow the navigation. It's going to walk you through the services that we provide, and it's going to take you a little deeper into what we do for business owners. And so I'd love for you to check that out. If you have questions, if you want to get started, there's a schedule button on every page on the bottom right. Just click that. It's going to take you right to my calendar. You can pick the time, you can pick the day, you can pick the location, and we'll get started. We'll just start with a conversation about you. What's important to you? Where are you now? Why are we talking today? What's important about now? Where are you trying to get to? What issues have you ran into? What do you need help resolving, solving, fixing, whatever? And we'll get through that work together. So lifemoveswealth.com, or send an email to info@lifemoveswealth.com. We'll get you set up. Take that first step. It's very important. And I think that's a great place to leave you. So thanks again for listening. Until next time, go take care of yourself. Be financially awesome. We'll see you on the next episode. Later on.
Thanks for listening to this episode. Be sure to like, subscribe, and share. To learn more about your financial purpose, visit lifemoveswealth.com.